You're listening to the Place Northwest podcast, your digital resource for the latest insight and analysis on all things property in the northwest of England. Listen when you want, where you want.
Hello, I'm Sarah Townsend, editor of Place Northwest. Welcome to this Place podcast, sponsored by the award-winning law firm Kuits. Based in Manchester, Kuits specialises in real estate law, including commercial and residential property, construction, disputes, planning, licensing and property finance. Today we will ask the question, how has Covid-19 affected the landlords and tenants of commercial property, including shops, offices and more, and what are the main considerations for commercial landlords and tenants as we gradually emerge from lockdown? Our guests are David Moroney, commercial property partner at Kuits, and Andrew Cooke, director of Manchester at Bruntwood Works, the developer's offices arm which creates, owns and manages more than 5 million square foot of workspace in the UK. The pandemic has caused disruption across so many industries, and commercial property is no different. We've seen the government come out with various initiatives to support businesses during the pandemic, for example, preventing aggressive action against them for failing to pay rent. More recently, there has been guidance on how businesses should prepare for a phased return to the workplace. But let's look at some of the remaining unanswered questions. So, David and Andrew, I'm sure you've got questions to put to each other over the course of our chat. But can I start by asking David for a roundup of the landscape so far? Have there been issues with tenants being unable to pay their rent? And how is this playing out alongside new or temporary legislation?
Yes, of course. I will start by touching upon the raft of new legislation which has been introduced post-COVID. There was the almost immediate Coronavirus Act, which placed a moratorium on forfeiture for non-payment of rent, which obviously means that a landlord can no longer or cannot for a period of time re-enter premises as a consequence of their tenants not paying rent. That moratorium is due to expire on the 30th of June. However, the expectation is that will be extended for a period of time. There was then further amendments to CRA, which is the ability to recover arrears by seizing goods. Essentially, quantum of rent which has to be outstanding for CRA to be implemented was extended to 90 days. There has been further guidance, and the guidance has focused very heavily upon landlords and tenants taking a collaborative approach. And the Code of Practice envisaged fair and transparent discussions between landlords and tenants with a view to meeting a sensible resolution. There has obviously now been there is a further bill in progress at the moment, which will shortly be passed into legislation. We anticipate that will be probably late June to mid-July, which will place moratoriums on potential debt recovery in certain circumstances where a tenant believes that they are likely to pass into insolvency, to be brief in explaining that, and also a moratorium on winding up petitions if the tenant's financial difficulties stem from COVID. So that is a very brief summary of the legal position. There's obviously a lot of detail in that we could go into in there, but I don't feel this is the time or place for that, really. It is the emphasis has largely been on, to an extent, restricting overly aggressive landlords from utilising all of their normal recovery methods against a tenant, but equally emphasising that parties should work together, as I say, in a collaborative fashion to try to reach a mutually acceptable solution to the current crisis. What we are finding is that clearly tenants who have been obliged to close their premises are struggling from a cash flow perspective, and have been corresponding with landlords to seek to obtain some sort of relief or mitigation against their rent exposure. Tenants have taken a number of different approaches to this. Some have been more tempered in their approach and have requested engage with a view to maybe rent deferrals or some sort of staged payments. Alternatively, we have seen slightly more aggressive approaches, with some tenants simply stipulating that they will not pay rent. We have been engaged, obviously, from both landlords and tenants' perspectives in trying to to unwind the potential log jams and to document the actual agreements that tenants and landlords are reaching in this regard. I think the approach of everybody, the government, from government down, is that the ideal world, and I'm sure this has been the approach at Bruntwood, is to reach a sensible solution with a tenant that benefits both landlord and tenant. Having said that, we are seeing aggressive approaches from both camps, landlords historically seeking, for example, winding up petitions, which are now becoming basically incredibly difficult to obtain because of the new proposed legislation, and or pursuing debt arrears in other regards, and as I say, tenants simply arbitrarily stipulating that they will not pay rent and seeking rent holidays, which landlords are being fairly resistant to.
That's really interesting, and I'd love to see what Andrew's views are kind of on the ground. What are your observations of the sort of the climate of the sort of those landlord tenant interactions at the moment, based on Bruntwood Works' own experience?
Sure. I mean, I guess for us personally, it's been a tricky few months working with our customers. There's been a huge amount of work to get close to our customers, and I use the word customer rather than tenant. It's something that we've done for the last 30 years, and it really is the bedrock of how we think about our relationship with our tenants, with our customers. We've been setting up our account management team to speak to the 2,500 businesses that we've got across the portfolios in each of the cities, to be proactive and understand what challenges they're facing or what the challenges might be in them paying rent to us, which, as you can imagine, is a huge task. And given that we've got such a diverse list of customers from varying sectors, that has been a challenge. But I think through all of this, having that proactive approach has actually deepened our engagement with the customers. We've got closer to them. We've understood their businesses better. Each of our customers now has an account manager assigned to them. So we have a personal contact within our team who has a contact with the customer to speak to them at every point throughout the payment of their rent. Certainly during the March quarter and obviously as the June quarter has just landed. And we've been doing a variety of different things, as David touched on. We've been quite forward thinking in ensuring that we are a conduit, or we can signpost our customers to any support that is out there for them to enable them to pay rent. So there's a raft of government guidance, government support around customers having access to loans, to grants, and so on, which we have done webinars on. We've signposted them. We've actually supported in preparing the materials that the customers need, such as supporting on pulling together business plans or finance support, because this is all the information that the customer will need in order to access these funds. And if they access these funds, it supports them to pay the rent. So we have to really have that one-on-one engagement with the customers to really bring them through what is a very tricky period. And that's been for March and the March quarter. We've had great success. We've probably reached around 90% across the whole business of rent collected. There's some fairly stark peers out there, other competitors, shall we say, who've maybe not reached those levels. But I think it's purely through our one-on-one engagement with our customers that we've been able to do that. And for us, really, it's kind of about it's been in it for the long term with our customers. We weathered the last recession. I joined the business in 2007, and our approach was very much the same. Yes, we didn't have the raft of government support, but we had the one-on-one levels of support for our customers, and bending and flexing our business plan to support our customers' business plan, which actually pays dividends when you look at our retention rates, which they're roughly twice the national average. We're about 70% of our customers stay upon lease expiry and upon lease break. So if we work with our customers now, we know it pays dividends in the future, and that's essentially what we've been trying to do for the last few months.
Yeah. And, is the view from your tenants, your customers, is the view from them that the sort of the government initiatives at the moment are, and, the encouragement to kind of work with their landlord and, you know, negotiate and compromise, is the view from them that these measures are sufficient, or are there sort of other additional pieces of support they'd like from central government?
I mean, there's a variety of different options open to our customers. We're and it's something that David actually touched upon. We are providing it on an ad hoc basis. We need to understand the circumstances, but we are providing rent deferral or rental holidays, or being a bit more forward thinking and saying, okay, you still have a need for this office space. This office space still meets your demands, or you see it meeting your demands in the future. So can we be creative in how we structure a new lease to provide them some upfront rent-free or concession now in return for potentially lengthening a lease or removing a break. So it's a real two-way conversation with the customers. What we're hearing is, whilst we are able to do that at a Bruntwood Works level, the customer then has the ability to go to central government and apply for the variety of different support measures in place, whether it's an interruption loan or grants or the CBILS. And the rate at which some of that support is coming through can be a little bit longer than it would take us maybe to structure in some rent free. So there's a variety of different ways that they can go about seeking that support. The immediate one is certainly from ourselves, but we would always encourage and signpost and point our customers in the direction of other support, which inevitably will have a knock-on positive impact for their business and hopefully for ours too, as they stay with us in the long term.
Okay, great. David, can I put sort of similar questions to you? How do you think the current environment will impact landlord and tenant relations going forward? And then picking up on what Andrew mentioned there, what can we expect to see in terms of new leases and their characteristics? Will companies increasingly seek shorter, more flexible terms? And will landlords be happy to give that to them?
Sure. I mean, the one point I would like to just pick up on briefly from what Andrew had said is that I completely agree with his reference there to working together and trying to find creative solutions at the outset of this. That was one of the key tones of our advice to our landlord clients and tenant clients was to look for a degree of creativity around this. A lot of landlords perceive that the legislation which has been implemented is tenant friendly and invites tenants to simply decline to pay rent. It isn't the case. It just limits your options in terms of pursuit. But a landlord shouldn't simply throw the towel in that regard. There are numerous things that a landlord can look to do to work with the tenant that would work to the benefit of both parties. As you say, the grant of a new lease, grant of a reversionary term at the end of the existing lease, or the deletion of a break in return for a rent-free might be more than the tenant anticipated getting, because they might get a decent length rent-free, and equally gives the landlord something in return which adds value to his reversionary interest. So I just wanted to echo that really, because that is something that well-advised landlords who are having open, sensible dialogue with their tenants, that is something that should be encouraged. In terms of matters going forward, as you rightly touch upon, the landscape of leases is likely to change. I mean, just from a pure drafting perspective, we're already seeing COVID clauses being introduced into leases now, whereby tenants are seeking termination clauses or seeking rent abatement in the event that COVID or similar pandemics impact upon their ability to use the premises going forward. Now, clearly, they create a host of problems from a landlord's perspective. If you're looking at termination clauses, you obviously have the issue that would hugely impact upon the value of that lease, because any bank valuing it, and I know we'll come on to banks shortly, any bank valuing it will assume that a termination event will happen at the earliest possible opportunity. So if you have a clause in a lease which stipulates that in the event of a pandemic impacting upon tenants' use, tenant can break the lease, the bank will assume that will happen on day one. Similarly, in relation to any rent suspension, in the event of a pandemic and impacting upon the tenant's use of the premises, it's how widely that is drafted, how it is linked into government guidance. And also the key point is, can the landlord actually insure against that loss of rent? Traditional lease loss of rent periods focus around usually insured risks, fire, flood, etc. So insurance is available in the market. Whether insurance is available for an inability to use premises as a consequence of a pandemic, I'm not sure if it is at the moment. And if it is, I suspect it will be colossally expensive at the moment. Now, there is an argument that would be passed down to the tenant. But it is something that landlords need to think about, and these clauses will evolve gradually over the course of the coming months. It is notable that PLC, which is one of the sort of repositories for precedents in the legal profession, are now introducing these to their draft documents. So it's clearly the direction the market will be going in the future. We might also see, as you've touched upon, much shorter term leases now, with tenants being reluctant to commit themselves to longer terms as they historically may, or alternatively longer terms with multiple break options throughout them to give tenants the ability to walk away. Again, that is likely to impact upon reversionary value of properties. There is also potentially a move towards, sort of, as counterintuitive as it may sound, given social distancing, but shared working environments once the pandemic has passed, rather than bespoke offices. So I think there will be a significant impact on the lease market from the nature of leases in terms of their term, also down to the slightly more detailed elements of the content and how they will operate in the event that if an event of this nature happens again in the future.
I'd like to come on a bit later in our conversation to sort of our kind of predictions for the workspace market, and how the pandemic may have sort of influenced attitudes towards that. But firstly, just picking up on sort of some more of the issues that these sort of conversations between landlords and tenants are raising. Andrew, I wonder if I can put this to you. We're keen to hear how funders are interacting with landlords during this period. Are they also adopting a more flexible approach?
Yeah, I mean, it's an interesting one, and I've got to be careful what I say, because I don't want to downplay the challenges that are being faced. There is non-payment of rent. There is construction sites being put on halt, albeit in reality a lot of those, certainly a lot of our larger schemes are now back on site. So there is naturally going to be a nervousness around funding and future property prices. But this is a sector that on the whole is pretty resourceful and hopefully generally optimistic. So I think we perhaps need to look beyond the headlines and beyond those sentiments that cast some doom and gloom out there, and say at the moment there's no transactional evidence to really support those claims. There hasn't been a reduction in rent. Our occupancy within our portfolio is pretty stable certainly over the last quarter. So the key drivers behind price reductions are still there, and I think as long as the core dynamics of supply and demand remain the same, and maybe as we'll get onto, I think office space will change in shape and design, and the need of office space will shape, but I think the overall necessity to have office space, its core function aside, but the need to have that space to interact with people and to come into the office is still there. So with all those dynamics still there, you would like to think that the funders are going to be generally optimistic, and what I'm hearing from our finance and our banking teams is that's generally the case. I don't know what David's views are on it. Maybe perhaps a bit closer than I am.
Yeah, of course. Now, obviously, one of the slight gripes we have from landlords clients, which I can understand, is that whilst a lot of legislation has introduced protection for tenants, there hasn't been a corresponding level of protection for landlords vis-a-vis their funders, because obviously any tenant who is not able to pay rent potentially impacts upon a landlord's ability to meet its funding commitments. Clearly, that will flow up the chain to the bank, and any break in that interrupts that flow. What we are finding, thankfully, is notwithstanding the lack of legislation on the point, banks are being extremely supportive and are acting in the spirit of what everyone seems to be attempting to achieve here, in relation to landlords and their relationships with tenants, from the level of allowing the landlords to manage their relationship with the tenant in the best way they see fit to get through the crisis, whether that be to allow rent-free periods, allow rent deferrals, allow tenants to swap to monthly payments, even to allow tenants to surrender premises. Banks are being extremely supportive and extremely quick and cooperative in consenting to that, because obviously one of the points that we should touch upon is, if you are funded, any arrangements you meet with a tenant which stray away from the terms of the lease you should clearly obtain funder consent for. We're also finding that funders are not really taking the point, when they probably could do, that there will be numerous breaches of funding documents as a consequence of failures to pay rent. We're finding that they're not in any way seeking to enforce any such breaches, and are actually being extremely cooperative in terms of granting forms of payment deferrals to the landlords, in terms of interest and capital holidays, mainly capital. To be fair, the banks would wish to see interest paid, but certainly capital repayment holidays. Banks are there to have a sensible conversation around that. So, generally speaking, what we are finding, like I say, is in the current climate and at the moment, funders are standing alongside landlords and are supporting them in assisting tenants and working with tenants.
Brilliant. Okay, well, that's good news. Now, what about occupiers starting to return to the office? Now, this is a big question, and the risks are there. So I'm wondering how landlords are working to achieve a safe reopening. Um, Perhaps Andrew first. You'd like to start on that one. I know that you went back into the office for the first time in 12 weeks, I think.
It was, yes, yeah.
Perhaps you can tell us a bit about, both the measures that Bruntwood has put in place in its offices, but also, across the portfolio, what measures are required at the moment. And then perhaps we can move on to David, who can tell us about the sort of like the actual specific obligations and liabilities on the part of landlords and tenants. But Andrew first.
Sure. I mean, as you can imagine, this has been a vast part of our job certainly for the last few weeks, as we start to reintegrate customers back into their workspaces. I think the key thing that I need to say is none of our workspaces have closed per se. Yes, there may be fewer people on site because there's fewer customers on site, but all our buildings are accessed 24/7. So where there has been a need for our customers to come on and off site, whether or not there is some sort of key function that the people need to carry out on site, the buildings have been open. But I guess for Bruntwood Works, we've been sifting through the huge volume of information out there, the government guidance, the Public Health England. We've been speaking to trusted consultants, and also speaking to the 2,500 businesses that we've got in the portfolio, and each of their employees. There's about 50,000 people who use our buildings every single day, or at least they would do. So it's about looking at the guidance out there, and then also kind of dovetailing that into how our customers want to use their office space when they come back in. And that's involved us going around, carrying out building risk assessments. So that's north of 100 different buildings to cover. We have empirical data such as footfall counters and access control data. So we have real-time information as well as building sensor information on how our spaces are being used. And with all that information, all the government guidance, with all the feedback from customers, whether through live-in surveys, so we have surveys that go out to our customers regularly, we have customer engagement calls through our customer experience team. We've brought all that together and put it into a number of different communications and documents which provide our customers with almost the things that they need to think about when they are bringing their own teams back on site. Now, what I probably should also say is there's two sides to this. We can do our building plans, our making sure our building's safe and secure and friendly and welcoming, but there's also got to be some sort of management in place for our customers bringing their own teams back on site within their own office spaces. So the two really need to integrate into each other. But in terms of physical things that we've done, we've put in one-way systems throughout many of our buildings, which will enable social distancing. We have increased sanitation points, whether that includes increased cleaning programs to make sure that the buildings are being cleaned more regularly. We have wayfinding and signage about how the spaces need to be used, because obviously there are some spaces within buildings that have huge amount of touch points on them, coffee machines and kitchens, so they all need to be managed in a very different way, at least while social distancing is in place. And actually, truth be told, I think some of this stuff will actually last beyond social distancing. I think there will be some health anxiety around use of space that will last beyond this. So we need to dovetail our business plans in that way to make sure that how we're designing our buildings going forward, frictionless contact points, getting in and out of the building, these are things that we're thinking about around our spaces, because I think inevitably customers are be coming back to the buildings with new expectations and new ways of working. So we need to ensure that we support them doing that.
Absolutely. There's so much to consider, isn't there? I wonder, some of the sort of measures that you described are in some of the government guidelines, and I wonder, David, can you tell us how much of the current guidelines are actually enshrined in law, or are they not really sort of legal specific? And even over and above that, what are a landlord and a tenant's obligations and liabilities in this matter?
At present, no, there is not much law around this. There's a lot of guidance, as Andrew has touched upon, as to how offices are to be used going forward, and clearly it is you need to follow the guidance at the moment. So, for example, and this sounds overly simplistic, but if, as has been reiterated numerous times, if you can work from home, you should work from home. A business cannot really oblige an employee to act contrary to that unless the employee's ability to work from home is significantly less than their ability to work in the office, and that is a demonstrable ability. So we obviously have that very broad guidance, but there is also clearly considerable guidance as to how our offices are to operate going forward. And Andrew, like I say, has touched upon a lot of it in terms of touch points, sanitation, how lifts are to be used. And in terms of how a building is to operate, again, as Andrew touched upon, there are two responsible parties to a degree. There is a landlord who will be responsible for the management of the common parts in that building, which will be entrances, common lifts, etc., common toilets. And there will be the tenants who will be responsible for the operation of their own demised space. And clearly it will be for each of them to manage those respective obligations. So there's probably not that much to add to what Andrew has said, in all fairness. I think he's covered it very well in terms of what people's concerns are. I know that we as a practice are working out how we can return to the office, and it is very practical points about where people can sit, which desks can be used, etc., etc.
Yeah, I mean, if I can just add to that as well, David, I think what we've been trying to do is set out how we're going to manage our buildings, but also speak to our customers. As I say, we do a survey, and we spoke to about 2,600 people, individuals who use our buildings, and that's a range of ages and sectors and different businesses. And 60% said they had a really strong positive feeling about returning to the workplace. It's about regaining normality, it's about getting routine back, it's about missing that social interaction. But within that, we had about 20% who cited that they were not looking forward to it because of perhaps health and heightened health anxiety around the pandemic. And they've also got commute concerns. Obviously, it's not just the buildings; it's getting in and out of the city, or actually getting to and from the workplace. So these are all things that we've needed to wrap up in our return to work guidance, which up posted on our website. We actually have a customer portal where all this guidance that we've set out, consolidating all these pieces of guidance, are pulled together.
Okay. David, I'm just wondering if there's any other sort of issues that might kind of rear their heads in this sort of transition period as we come out of lockdown. What about things like service charges? Is there going to be any change to that? Because obviously the sort of level of provision is perhaps different to what it was before.
Yes, completely. We would anticipate, as a consequence of how offices will operate post-lockdown, that service charges are likely to increase, because there will inevitably be increased costs which the landlord has to incur, in terms of just from simple cleaning down to the sort of management, etc., etc. So we see service charges. I would anticipate service charges increasing. Now, this again can put strains upon landlords, because landlords may well have service charge caps, which were calculated on a pre-COVID level, whereby a tenant is not obliged to pay more than a certain figure by way of service charge, which might have been wholly reasonable and sensible pre-lockdown, but might be a significant shortfall post-lockdown as a consequence of the additional services which a landlord will have to provide. So that is something which landlords will have to think about, and will impact to a degree upon arrangements with tenants in relation to service charges going forward, and the levels of service charge caps which you would anticipate increasing in the short term if they were to be agreed by tenants. I would anticipate landlords seeking to resist any drafting of that nature, because of the uncertainty as to how much will be likely to be expended in that regard.
Okay, that's really interesting one to watch then. Now we've got about 5 minutes left, and so I just wanted to move this out into the sort of macro, big picture thinking. David and Andrew, would you like to give your main predictions for workspace in the months and years ahead?
Wow,
Yeah,
big question.
to go
So
first.
what do I say? So I think if I go first, if that's okay, I think where my head's at with this stuff is, we've seen a change in the needs from office space. We've seen a change in how leases are drafted, as David touched on. The move to flexible leases actually started way beyond COVID, and I think what we're seeing and what we're hearing from our customers is actually the pace of change is just accelerating, but actually where offices and workspaces heading is probably on the same trajectory. I think there is going to be much more of a demand for short, flexible space. There is that, obviously, volatility, the uncertainty that customers are returning to. So certainly from a lease and an agreement point of view, our customers need to see that. But for me, it's about what are the needs from the office space. There's a term I heard the other day that on-site is the new off-site. So we're all working in a space at home that we get our cognitive tasks done, but actually, is it more about the social connection that we used to build off-site now happening in the office? Are these spaces going to see less less desks and potentially more collaboration space, which actually is a move that we'd seen beyond COVID. We have a pioneer scheme that we are rolling out across Manchester city centre to start with. And actually, David is a customer in one of our pioneer buildings in Blackfriars House, and the space that we're creating is there to support more collaboration, is to support more meeting space, more space for customers to share ideas and really sort of bounce off each other. And that's difficult during social distancing, but beyond that, because at some point this does have to be relaxed, that it feels that businesses will have an even bigger emphasis on that. And it's all well and good saying we've got all the technology in place, whether that be Zoom or other sort of digital methods, but the social interaction and the non-verbal communication, let's say, that you get from being in the office and building that company culture around you can't be underestimated. So I think there's some question marks over what the office space looks like, but the need for it, certainly from where I'm sitting, is there definitely.
Mm-hmm. Yeah, brilliant. Okay, David, your thoughts?
Yeah, I think it's probably opened everybody's eyes to how easy working from home actually is. I probably work in one of the more traditional sectors where working from home has been gradually evolving slowly, but it's probably accelerated as a consequence of this by years for what has been a few months at home in terms of people's acceptance of it as a way of working. Having said that, I do agree with Andrew that I don't think this is going to make offices redundant by any stretch of the imagination, because it is people, I think, work better when they're in person. I think I'm not by no means an expert on this, but I've read numerous studies which suggest that is the case. So I think there will certainly be offices, but it will just be a different form of office rather than necessarily people sat around desks. It will be, as Andrew said, a much more collaborative working space, meeting rooms, etc., but with a greater flexibility and a greater move towards home working. So I think I echo largely what Andrew has said. To be honest, I don't think this is the end of the office by any stretch of the imagination, but it will just be a different form of office that we'll be going back to.
Interesting. It's going to be a very enlightening and I guess evolving time over the next 6 months. So we're going to have to wrap it up there, I'm afraid. But it was a really interesting and very useful conversation, we hope. So just a final note for our listeners: if you'd like to contact Kuits, please visit www.kuits.com. or email marketing manager Sarah Glynn at Sarah Glynn, or one word, GLYNN, at kuits.com. Finally, I've been Sarah Townsend, editor of Place Northwest. I'd like to say a big thank you to our speakers today, David Moroney from Kuits and Andrew Cooke from Bruntwood Works, and to our listeners, and we hope to see you again very soon.